Hi guys, how are you? Welcome back. Mine this one, titanium. Patreon.com/real macro. Patreon.com/real macro. Come on down and subscribe. Let's continue this series. And, the goal here is that you guys understand my language. So, how do I view an economy? And I'm going to make it as simple as I possibly can for everybody to understand. Okay? So, in the previous video, we talked about how incubator economists put the dollar in the center of the economic universe and not a human, right? Not you, not people. That somehow, if you just print more dollars, that there will be more economic activity to value that dollar. But it's actually in reverse, right? It's the cart ahead of the horse. It's the people that are going to create the economy that's going to value the dollars. When the dollars are in excess, what happens is there's no economic growth that reflects those dollar printing. And that is the pure definition of hyperinflation, where you print more and more and more and more and more, and you're not getting uh, productive output, and you're getting less and less and less productive output. That is hyperinflation. So just to recap, people are at the center of the economic universe, not dollars. People are going to go out, they're going to work, innovate, construct, do whatever they have, and then they will build an economy. Okay. So let's move on to the next slide. And in this slide, uh, what I want to show you is what happens when a dollar is created. Okay. And this is the economy. This is the productive economy. That's the part where everything, um, oops, that everything matters. Okay, it's the people, always the people. Don't forget that. All right. So we create a dollar out of thin air, and um, what happens when the government creates digits or currency or a dollar or whatever? Well, it comes in to the productive economy. It circulates, it exchanges hands, and eventually it ends up in savings. Okay, and that's what these are dollar bills, $10 bills are basically indicating. Okay, so think of think of fluid, think of water, think of a hydraulic system, or it depends on how you want to view it. But when you create a dollar, okay, that dollar must end up somewhere. Okay, it's going to have its utility. It's going to do whatever it has to do. But eventually it has to end up somewhere. And that somewhere is savings. Always savings. What happens once it's in savings is important. And that's what we're going to largely focus on. What happens when the dollar ends up in savings? Ideally, in a perfect economy, everything is great. This dollar should not remain in savings. This dollar should come back into the functional economy in investment and then create a bigger economy. Okay, it's always going to end up back in savings, but then it has to be reinvested. And this is an absolute perfect economy. Okay, this is what I call the ecosystem feedback loop between savers and non-savers. Okay, because the only way that a dollar can ever end up in savings is if the productive economy uh, dissaves. Okay, if it dissaves that income, um, then what ends up happening is you have profit savings. Okay, so this is the productive economy, and this is the unproductive portion of the economy. These are the two sectors that you always must think about when money is circulating. No profit, no profit, nor savings can ever, ever occur unless the household income is the saved. Okay? You cannot have any savings without spending. Now, this is very important to understand, and we're going to come back and we're going to revisit this again. But I just want to make you aware of how profit exists. Okay? And that's why it is very important that those profits, those savings, end up back into the productive economy in an ecosystem feedback loop, and then it's going to go back to savings, and then back into the productive economy. And again, this is a perfect economy. Okay, there's no such thing as a perfect economy that is sustainable, and there's a number of reasons why that is. Okay, but for the sake of this video right now, just think of a perfect economy, what we should be striving for, okay? An ecosystem feedback loop between productive and unproductive uh, dollars. Think of it, maybe this is a better way to think of it. Think of this as private sector number one and private sector number two, okay? So we'll use some of this terminology later on. Now, in a perfect economy, when should the money supply or deficits increase? Well, if you start out an economy that is this big and you grow it and it becomes a little bit bigger, let's say this is, I don't know, 20% bigger, and then another 20% bigger. Well, you want to have those dollars increase via deficits as the wealth of that nation increases. Now, the Austrians will tell you no. Okay, that would cause inflation. Well, that's not. Inflation is a multifaceted word, and you have to understand that. The word inflation has many different meanings. In this particular case, when you have quote unquote inflation of the money supply, and it is reflected with the equal amount of wealth, then that's not necessarily inflationary in the bad sense of the word. Okay. Now, in order to grow an economy, you can do it a number of ways. You can be very innovative. You can have more population. You can have, there's a number of ways and a number of ingredients that you require in order for an economy to grow. But again, in a perfect economy, as the economy grows, then the money supply must grow equally in order to accurately reflect the value of that economy. Without the increase of the money supply, what ends up happening in a deflationary environment is that it disincentivizes people from producing because they're all fighting for the same dollar. So the dollar actually has an intrinsic value, but the dollar in of itself is just a measuring device, right? It's not something that you buy and save. Okay, if you do that, there's no economy because nobody is buying anything and exchanging. It's not a commodity. Okay, it's a think of it like oil in an engine. Okay, the way you want to grow the value of that currency relative to other currencies is to produce wealth, is to continuously produce wealth, to become more productive, to become more innovative. Okay, that's how you grow the value of a currency. You don't grow it by limiting its supply. And this again, it's very key that a lot of Austrian followers and believers believe in this kind of thing. That they somehow just limit the amount of money in circulation that they will create value. No, that's not what creates value. What creates value is people producing, innovating. Okay, that's what um, that's what it's all about in economics, right? Now, again, when a dollar is deficit spent, and we'll get into how it's deficit spent, but for now, when a dollar is deficit spent, it goes through circulation, people use it up, and then eventually it ends up in savings. That's key point. Ideally, what we want this dollar to do, okay, is come back into the productive economy, private sector one, go again through the productive economy, And as the wealth increases, we also want the money supply to increase accordingly. Okay, and when that happens, it's not inflationary in the bad sense. It's inflationary because you can purchase more things that are available in the economy. So that's it for this video. We'll do another video here shortly. Again, patreon.com/real macro. Come on down, subscribe, and we can talk more about real macroeconomics and investing. Okay, take care. Bye bye.